How you doing? How you doing? How you doing? Welcome back to the freaking channel, guys. After a long weekend, right? Today's Tuesday. A lot of crazy action today, guys. I would say, right? A wild market today. None of it really makes sense in my opinion. All right. We see a lot of volume in some plays, you know, like BBIG, you know, some volume, some action in DWAC, dat chat as well. You know, I saw like a 50% run. While you have a lot of companies that were bleeding, right? Just to start off, right, let's look at the indexes. So you can't, you know, AMC took a dive today again, guys, and that's to show you that a lot of times the market, you know, is gonna do what it's gonna do, guys, and there's not much that investors can do about it. All right, but check this out. The Dow Jones was down negative 543 points. The New York Stock Exchange Composite right here down 275 points. And the NASDAQ down negative 386 points, okay? So that's pretty red, that's pretty bearish, guys. You know, today was a bear market for sure, okay? But remember, there's always opportunity in the markets, okay, guys? And what I wanna remind you that, like, even though, you know, I keep my AMC shares, I still hold them. I'm not releasing those shares, guys. That, you know, there's other opportunities, other plays, guys. I'm gonna put my phone on silent, right? So always remember that, keep that in mind, that anything could change in a quick switch, okay? So today I want to go over some crazy information on FTDs, right, with BBIG and AMC, and how they're kind of like, you know, related, and why I talk about them in similar ways, and how I think that both of them are a short squeeze play, right? So that's what I'm playing them as, and then we'll go over some lucid information that came out, okay? So remember, I'm not a financial advisor. This is not financial advice, guys. This is my opinion and just what I'm doing in the market. And for new investors, I'm here for you guys. You know, if you've been trading, you know, recently within the past year, if you just got in, guys, and you only saw the bull market run up, everything was running. Well, this is what is like a bear market, okay? Everything's coming back down. And it's because of the overall economy right now and inflation and all that has to do with it, okay? So let's go ahead and switch up, you know. And first thing, guys, that I'm gonna pull up here before we get started is check this out. So we're about to hit 10,000 views, 952. You know, I expect to hit them after today's video, and I am just like so happy, guys. I appreciate you guys spending the time with me and all that, right? Like and coming here to the channel and supporting me. All right, thank you, guys. I appreciate it. So let's move over here at AMC, okay? This is the daily chart, guys. The RSI is absolutely just, you know, destroyed. It's at the bottom, way bottom down here, which doesn't make sense to me. But, you know, the reason I'm going to start here, guys, is because there has to be a reversal at some point. And look how crazy this is, like a year ago in January, right? Like right here when we had this big first spike. Look how the RSI went down. It's even lower right now than it was then, okay? So I expect the reversal to be insane. I expect it to be nasty, all right? With a lot of volume, okay? So, you know, just, I know that we've broken down, but here's the first way that I want to relate it to BBIG, guys. Like, things change, okay? Trends change eventually. Let's go look at the daily, okay? And this is BBIG, right? So for the longest time, it was in this descending triangle. And then look what happens when the RSI, right? Boom, it just snaps and it goes. The MACD shows you as well the move before, right, coming down, and then it explodes, okay? And it snapped out of this downtrend, and look at what it's doing now. It's trying to come back and test this Fibonacci level, okay? And that is a very crucial, I'll get into it right now, point right there, right? But let's look at the AMC options chain, guys. This tells us a lot about where the stock is. You know, in my opinion, guys, right, if we see some big buying pressure coming and it triggers this to go all the way to $30 to $40, like there's 63,000 contracts here, right? Open interest right now, guys, that are there. We'll get the volume update. This is for today, right? But it's going to take a few hours for it to update. So this is the current information that I have here, okay? But this is the area. These are the calls, right? So the max pain is 22, I think, this week. Let's see if I could find right here. So 22 is the max pain. And as you can see, there is a massive amount on AMC, right? We've all noticed the volume on the options. We've been talking about it. But that's what, to me, could trigger a lot and make this thing run in the same way that, you know, AMC, that GameStop ran last year, guys. Okay, back to the options right here. Okay, so there is heavy action here, right? So to me, if the price gets to like 30, 35, and 40, those positions have not been hedged for. And that's what I think could start sending this thing if they have to start buying shares, right? Not the shorts, but the market makers who have created, who have sold these contracts, right? These calls. On the put side, guys, as you can see right now, it's good. What are we at? We're at 20. Let's see, 1876. Okay, let me bring this down to okay, because that was actually not updated. But this is the call side, right? But it's the same thing. I mean, I'm still looking for that 30, 35, 40 in order for things to really get crazy and get going to the upside. But the puts here, there was a lot here at 34,000, right? So that's not good for us right now. Those are in the money, okay? And then as you can see, all the way up to 15 and 12, there's puts betting against AMC right now, basically, right? So that's what you got to pay attention to. Let's see what else. I'm gonna, point this out too, guys, that they're shorting us through the ETFs. Like what they're trying to do, right, is there was about 100,000 that were in the money last week. So they're just trying to knock it down as much as they can to get those out of the money, right? And that's how they're shorting us through ETFs. The reason this doesn't change much is because they're using the ETFs to short us, all right? And here, as you can see, there's a massive amount. I mean, if you were to multiply that times 100, guys, like if they were all to run in the money, that would be the squeeze, okay? That would be the MOAS, because they would be trying to find shares and it would just be madness, right? It would be absolutely insane. Okay, now let's look at the BBIG chart here and let's zoom in to see what happened today. To me, this is showing mad strength. Right now it's at 520 or $5.26 with volume at 270 million, guys. The average volume was 24 million. Now, what I want to point out to you is that this only has 87 million shares in the pool, right? So it has a free float of 87 that are tradable shares. But then you get these days, and especially the past 4 days, like there's been like over 500, 600 million volume altogether, guys. All right, how does that make sense? To me, it doesn't. We had a really nice stepping action that has been happening, right? And that's what's taking the price higher. You get the rips, and this is the VWAP too. So when it goes above VWAP, that's the strength, guys. You had a huge gap up in pre-market, right? Jumped up, I think like 13, 14, 15% pre-market. And then you keep seeing the stair stepping. And then it came to the resistance here, right? So this is part of the Fibonacci that I have drew out a couple of days ago, because those are the areas that I see resistance at, right? So it's about this $5.30, and it hit it pretty damn perfect, but you have this triangle, right? And what I liked into the close is that it went above the VWAP and it bounced above this, right? So tomorrow I expect to see more upside action, guys. That's my personal opinion, right? As long as the volume continues, and then I'll go over the FTD information right now that I have to show you guys too. Right, so the stair stepping, it got rejected here, came down, lost the VWAP, showed strength again, and now it's coming to the end of this, right? What I want to expect to see is a break of this, and it's going to be a nice break, right? You will see, again, like as long as the volume is there tomorrow, guys, I expect to see this keep going, right? So let's zoom out a little bit more. And this is the stepping action that you see ever since it broke out of this downtrend, right? You start to see the upside stair steps into a bull flag. Okay, that's what you would call a bull flag right there. And again, so if you are bearish though, if you're looking for the downside, guys, then there's obviously a gap here, right? So that would fill it. So it would come back down to this $4 area and see if it could catch support and bounce. But I don't see that happening right now, guys, because of many things, right? So what you have to pay attention to is the heavy volume. That's the first indicator to me that's showing strength. This is the 10-minute chart. We can start to see a cross here that's happening. That's good. That's also bullish. And the RSI is hanging out up here, right, in the 50 to 70 range, which also shows strength. Okay. So now let's move on to this, guys. So BBIG, right? 87 million shares is the free float, supposedly, right? And now this is going to refer to FTDs and naked shorting. And in my opinion, guys, there is naked shorting going on with BBIG. So this is updated this morning. So the current short interest is around 20%. Let's see, SI is up 2.4%, is around 70%. And the estimated short interest is 25.83% of the free float with 99.88 utilization. All right, guys, that is absolutely insane, right? Like, this is not going to add up. You need to understand that basically all the shares are accounted for, right? They're used up, they're shorted, people are holding them, whatever, right? So the reason I think this is crucial, or why I think this is also getting extra volume, is because of this, right? Watch. So supposedly there is 0 shares available right here. I know it's Fintel, guys. I know it sucks. I know that we've had our issues, especially like the apes. But this is the data that I have to prove my point. Okay, so 0 shares available. And this has been like this for a few days now, right? And then we go over to the stocks era here. If you pay attention to the dates, guys, there has been a massive amount of FTDs with BBIG, okay? So with BBIG in December, and now the new data has come out, and look at the red here. So look at the volume, the dates here. So I expect this volume to continue for BBIG here in the next few days, guys. The options chain also is nasty. It's filthy right now. Like, this could easily gamma squeeze. It's running up 2.3% at 530 right now, right? So look at the dates, 120, 21, 24, 25. And this is almost when we started to see the BBIG run up. So in my opinion, guys, they are delivering some FTDs, right? That's why you see this crazy volume when the market is still falling. Now the shorts are starting to probably think about this, right? They're not quite there yet. The all-time high is like $12, $13 for this. So there still is that room, right? But if it were to break 12, guys, you know, here soon in the next couple of days, man, you that's called a technical breakout, and you see a huge push to the upside trying to find the new all-time high. All right. But yeah, that's what I want to, you know, point out to you guys. All right. The FTDs are a problem. Okay. That's a massive amount. 2 million, 3 million, 4 million, 4 million, 1 million, right? That's a lot of issues that are happening. And that's not just on AMC, guys. It's also with other stocks, right? So BBIG. Now, let's compare it to the AMC one. This is the new data, right, that we have up until the 31st. So remember, there was an article that came out that said that there was over 400,000. Well, there was actually over 1 million FTDs that happened, guys, in December. Okay, when you add up all these, right, 438,000. To me, that looks like over 1 million, right? So that's a lot, guys. That's insane, right? Twice, and it's supposed to be, you know, it can be clerical errors, like where there's somebody who messed up. I don't know. How does Microsoft have 0 fails to deliver, right? And that's a big cap stock. Okay, so next thing I'm going to show you guys is the fact that I know that, you know, Citadel gets a lot of attention, Citadel, right? And Kenny Boy, you know, all that. They get a lot of attention for the AMC squeeze, but they're not the only ones who have massive short positions, guys. There is other hedge funds, right, that I can show you here, right? So this is from what I want to point out is that there was this huge drop, right, for AMC, guys. Back here we have the daily. So let's see, I'm talking about when it went from like 40 down. So November 15, 16, 17, that's when it all started, and you saw this nasty drop, right? That everybody was like, what the heck? That doesn't even look real, right? Okay, so let me point this out to you guys. You have 3 hedge funds that I'm going to point out to you that is like, this doesn't even make sense, okay? So check it out. We're going to scroll. These are all shorts, right? Shorts, puts. They're betting that it's going to go down, okay? But I think that they planned this and, in my opinion, targeted us, right, to get this. So you have this Jane Street group, right? 4.2 million puts on the 16th, right? Then you go down, you have, where was the other one? Here. Something, Altai Capital, also on the 15th, they took out 4.2 million puts. And you multiply those times 100, guys. Those are the options, right? And then you go down, and Susquehanna, guys. This is why we saw that drop, guys. This was the nastiest drop, on like the most shorted, biggest attack that I've seen, right? So you're talking about 12 million puts, guys. Like, damn, right? This Susquehanna, okay? So all of the talk, even Bank of America here, look, 101,000. And then this 683 Capital too. So all those shorts, guys, have to be bought back, okay? That's how we're gonna get the reversal at some point when they start to cover, guys. That's when you'll see the rips, right? But they have these positions open, guys, okay? And I'm referring also, there's, if you want to, you know, proof, look at Al from Boston. He shows the Bloomberg terminal, and the same names are in there, guys. Okay, so like I think we need to show all the hedge funds that the apes are here still holding, guys. You know, I don't think that we should just focus on Citadel, but to let all of them know that we're not leaving and that all their tricks, right, aren't affecting us, guys. Like, I know that the price sucks, like, but there's been a lot of people that have been warning you on YouTube, guys. Like, it's crazy how it bounced off of this Fibonacci here, right? Everybody said 17 is a support. All right, now we're at 1884 right here. But they're just trying to knock these out of the money, because then if those run in the money, guys, that's when it gets crazy. That's when they're in trouble, right? And they have to actually locate the shares. So let's go to BBIG real quick and show you this, what I found, okay? It's the same companies that are shorting AMC and BBIG and GME, and they go heavy on these shorts, right? Because they're against retail, guys, okay? And check this out, we'll go down. Jane Street, buying 1.1 million puts on BBIG, right? This is BBIG. And then we go down. Susquehanna, same one. 2.2 million puts. And then, yeah, so Citadel right here again, puts 1.2 million, guys. Okay, so they obviously are not for the retail. They're there for themselves. They're there to go against us and try to take money from retail. All right, the proof is right here. It's the same people. I know Fintel, you know, whatever, doesn't do the full reporting, or they don't know the full story, but this is the options chain, right? So just to show you that, like, it's the same people, the same hedge funds that are against us, okay? And this is what I really liked about BBIG today, guys. The fact that it closed above 5. Now it locked in 77,000 as of today, right? Those are in the money. And then on Friday we had locked in 30 some thousand, I believe. So it's these, right? So this is really good. This is looking really juicy for a short squeeze, okay? Because right here after 10, guys, if we lock in all of these, and they have to locate those shares next Monday, next Tuesday, and a gamma squeeze would come into play, into my opinion, right? So the highest is 24. And then what's good to see is that you don't see as many puts right now in the chain, right? For the puts on BBIG, like there is some here at 450, but a lot of these guys have gone out of the money. Look, 5,000, 2,000, 3,000. So that's showing the bull power there, okay? All right, guys. Last thing, okay, with the volume, right? So just to point this out with BBIG, guys, the naked shorting, in my opinion, right? This is my proof, okay? How in the hell do you go from 1.1 million shares, right, shorting this, to 53 million shares, short volume right here, 53 million, and 60% of the volume, right? When we saw over 200 million, I'm pretty sure, volume. What's going on here, guys? Like, none of this really makes sense, right? That's what we've been trying to say. Where's the transparency? Where's the protection for retail, guys? In my opinion, guys, this is naked short selling, right? Because there's supposedly 0 shares to short, and then but somehow you have 53 million, and then we'll get the updated one, you know, later today. But yeah, let's go ahead and move on to LUCID real quick, guys. Okay, let's go over LUCID. Let's see, where is it? Right here. Cool. So obviously, you know, a very choppy day. It was down negative 5.78%. The reason I still have this Fibonacci, guys, is because it broke it here, right? It's been kind of telling me where it's bouncing. It's just an indicator, as well as the EMAs, right? And for a while, it almost got through, and then it broke down, and then it gapped down, okay? So now there's the possibility that this gap can be filled right now, right? And very, very low volume today compared to the average, which is 76 million. So pay attention to that, right? So if it breaks down, the reason the fear is coming in is because of the lockup period that I'm going to go over that information. But this is what I've been trying to tell you guys, right? Like, these are here for a reason. These lines, You know, for those people who say that technical analysis doesn't work, well, it doesn't work that much on highly manipulated stocks, but you know, I don't think Lucid is highly manipulated, guys. It kind of feels like it trades, you know, in a more normal way. But right now there is fear that there's going to be this huge sell-off from this this company, right, that I'm going to go over right now, that has a massive share. They're major shareholders. So we need to see, you know, it broke 40. I didn't think it was going to break 40. So if you're bearish, guys, like it's going to test this 39 area. And if it goes down, well, it would go all the way down to like around here, 36, 35, maybe 33 to come test that. All right. But let's, you know, not pay attention too much here because we know what's going on like on those chart. This is just what I want to point out. If you're bullish, I expect to see a bounce, right, and a reversal. All right, because there is support here, guys, right? There's been multiple times where it gets through. Now I'm expecting it. It already touched once, touched twice. Let's see if we can go back and screw the shorts. Okay, so this has recently become a kind of a short squeeze play, right? Lucid. And I'm going to show you here why. This is a good article that kind of explains what's going on. So what's going on with Lucid Motors today, right? It fell 4%, like I just said, whatever. Shareholders of Lucid stock are expecting a major price catalyst tomorrow. According to a filing submitted by the U.S. Securities, the SEC, the last November, the lockup expiration for legacy shareholders of Lucid will expire 180 days after the closing SPAC, right, merger. The day is tomorrow, January 19th. With that said, let's dive into implications, okay? So just keep this in mind. This is news that you do need to pay attention to because this could affect the stock. Tomorrow, legacy shareholders will be able to sell their shares. The event that has potential to make some volatile moves. Legacy Lucid shareholders own 1.19 billion out of the 1.6 billion shares that are outstanding. Okay, so they own a large portion. They are the PIF, and they're the largest legacy shareholder, right? In addition to the PIF, they own a massive 67% 0.2 in Lucid. So any significant sale would likely affect the stock to fall, right? Because if they sell those shares, guys, of course, that's a lot of shares. However, the PIF is regarded as a long-term investor, so investors are not anticipating a major sale. I'm honestly not anticipating a major sell-off as far as from that, because they're believing in it, they invested in it, like they're going long. Why would they sell it just a few months later? Okay, I don't think that makes sense. Okay, so the last time this happened, right, this was on September 1st, and on that day, shares of Lucid stock fell by almost 11%. In addition, the Lucid shares fell by more than 20% the week prior to the expiration. But now January 12th marks 1 week before January 19th lockup expiration, and the shares have declined about 11% is what it's saying, all right? However, the price narrative for Lucid changed dramatically after September 1st lockup expiration. 1 month after the expiration, Lucid traded 35% higher, right? So there was a rally after that. Today's shares of Lucid trade more than 125% higher than when compared to the lockup's day of closing. Okay, however, this doesn't always like repeat itself, right? However, investors should note that just because the price of Lucid increased after the last expiration does not mean it will happen again. And then also, moreover, Lucid is currently, this was the news that came out pretty much over the weekend, has a short interest of 15.81% of its float. With such a high short interest figure, the probability of a short squeeze is heightened, okay? For them, guys, like anything over 10% is absolutely nuts. So this is in danger. For the shorts are in danger, all right? And there's another one. There's another lockup that will happen on January 23rd. On that day, Churchill sponsors will be allowed to sell their shares according to the updated. Churchill sponsors own 51 million shares, all right? So that is the reason why, you know, Lucid is really moving right now. There's fear. There's the overall market, you know, tank that this is part of the NASDAQ, and the NASDAQ went down pretty hard today, okay? So guys, that's all I got for you today. I know that it was a lot of numbers, information, but it is important, guys, right? And this is how, you know, I see them taking advantage of the retail people, and that math, just because it's on a T+2 day, right, with a BBIG and everything, the market, the way it settles the shares and stuff, that's what gives room for these, you know, short sellers and all this, you know, FTDs and stuff like that. And that's what we've been trying to put in the light, and, you know, to spread the knowledge. And that's why, you know, if people out there, the AMC shareholders, guys, like, don't panic sell. You know, don't do something you're going to regret later, because there seems to be a lot of, you know, malicious attacks against us for the past few months, okay? And like I showed you in that data, I think that kind of proves it. And so anybody who's in BBIG, hey, I got you. I'm playing it as well, you know, calls right now, shares, guys, and I'm trying to make some money, but I don't even touch my AMC, guys, right? I just leave it there, let it be, and we'll see what happens with it, okay? And we'll just keep watching it and tracking it, and I'll give you guys my daily opinion, all right? So thanks for coming in, guys. I'll catch you guys in the next video. Later.